5 tools run a working forex stack. One cheap habit beats every indicator combined. Here's the list.
The working retail Forex toolkit is shorter than you think. 5 things: a regulated broker, a charting platform, an economic calendar, a position size calculator, and a journal. Total cost, $0 to about $30 a month. Anyone paying more is subsidizing marketing, not buying edge. But here's the catch: most traders never figure out. Of those 5, the one tool that compounds your edge faster than any indicator, any signal, any AI app, almost nobody actually sets it up. We'll get to it. Start with the broker. Tier 1 regulated venues only. Pepperstone, IC Markets, IG, OANDA, Interactive Brokers. The broker isn't just where you execute, it's your first risk control. If client funds aren't segregated under a real regulator, every other tool you bolt on top is decorative. That's why the broker counts as a tool, not a backdrop. That handles the venue. The next decision is what you actually look at, your charting platform. 3 real options for retail: TradingView, MetaTrader 4 or 5, and cTrader. They're not interchangeable. TradingView is browser-based, cross-asset with the largest community indicator library in retail. PineScript lets anyone publish a custom study. The free tier covers about 95% of what most traders need. Most working analysts use it for chart prep, even when they execute somewhere else. MetaTrader 4 and 5 sit at the other end. Installed at virtually every broker, free, downloadable, dated looking, but reliable. MT dominates one thing: automated trading. If you want to run an expert advisor, MT is the venue. cTrader is the third option, less common but precise. Built for ECN-style scalping, depth of market, level 2 quotes, tight execution at brokers like Pepperstone, IC Markets, and FX Pro. If you're holding trades for seconds, cTrader is the cleanest tool for the job. The workflow most pros land on: TradingView for analysis, broker native MT or cTrader for execution. 2 tools, both free at the entry tier. Now what goes on the chart itself, because this is where most retail accounts get visually loud and analytically blind at the same time. Charting platforms ship with hundreds of indicators. A working retail chart usually has 3 or 4. That's it. Moving averages, the 20, 50, and 200 EMA for trend direction and dynamic support. VWAP as an intraday mean reversion anchor. ATR for stop loss sizing because volatility adjusted stops scale with the actual market instead of your guess. And RSI for momentum context and divergence. Maybe tick volume on top for breakout confirmation. That's the entire list. Here's the mechanism behind why more is worse. Most indicators are derivatives of price and volume, just rearranged. So an 8 indicator chart isn't 8 times more informative. It's the same signal repackaged 4 times, drowning out the original. If you can't say in one sentence what an indicator on your chart is telling you, take it off. That's the chart. The most important tool that isn't on the chart is the economic calendar. forex-factory or investing.com. Both free, both comprehensive. Almost every retail blowup post-mortem ends the same way. Traders in a position, central bank speaks, spread widens to 50 pips, stop gets skipped, account is gone. The calendar is the thing that tells you in advance when that's about to happen. FOMC, ECB, BOE, NFP, CPI, every high impact release flagged with expected value, prior value, and impact rating. So the simplest rule: close discretionary positions 5 minutes before any high-impact release on a pair you're exposed to. Re-enter once the spread normalizes, usually 1 to 5 minutes post-release. That single discipline removes the most common cause of catastrophic loss in retail forex. That covers when not to be in the market. Position sizing covers how much to put in when you are. The math is straightforward. Lot size equals account equity times risk percent divided by stop distance in pips times pip value. Walk through it by hand once so you understand it. Then stop trusting your memory in live execution. Use a calculator, MyFXBook, Baby Pips, or your broker's built-in one. All free. And now the tool I teased at the start, the journal. If you had to pick one tool that separates retail traders who improve from traders who plateau, it isn't the indicator, the platform, or the broker. It's the journal, and almost nobody sets one up properly. A working entry captures the setup and reasoning before entry, a chart screenshot at entry, the exit price, the R multiple realized, and a note on your emotional state and any deviation from plan. That's it. After 50 to 100 log trades, something specific happens. The setups you thought were your winners turn out to be flat. The ones you almost stopped trading turn out to be the actual edge. Without a journal, that pattern is invisible. With one, your trading turns into data instead of memory. Start with a structured spreadsheet. Upgrade to EdgeWonk or TradingView once you cross 100 trades and the workflow is worth automating. So that's what's in the stack. Quick on what isn't. Paid signal services almost universally underperform once execution costs are in. The few legitimate edges don't need to spam Telegram. AI-powered indicators, marketing label. The math underneath is usually a moving average crossover with a neural network sticker. Plug-and-play EAs from the MQL5 market. Most are curve fit to one historical period and fall apart in live conditions. News terminals at retail size. A $20,000 a year Bloomberg cannot generate enough edge on a $10,000 account to justify itself. And 6 monitors before you need them. 6 screens are not required to swing trade Euro-US dollar on a daily chart. So here's the verdict on a working 2026 retail stack. Tier 1 regulated broker. TradingView for analysis. Broker native MT or cTrader for execution. forex-factory for the calendar. MyFX book or baby pips for sizing. A spreadsheet, then EdgeWonk or TraderView for the journal. CFTC COT reports weekly for institutional positioning. And central bank statements read direct from the source. Total, $0 to about $30 a month. If you're paying more than that for tools, you're not buying Edge, you're buying someone else's marketing. And the tool I opened with, the one almost nobody sets up, the journal. It's the single highest ROI thing in the entire stack. It costs nothing to start, and 50 trades in, it turns your trading from guesswork into evidence. That's the upgrade, not another indicator.
5 free tools, 1 habit that compounds. Start the journal. Full breakdown linked in the description.